Hello everybody, so today I'll go over my zone strength indicator. It is a 82% profitable with a 2% average return per trade indicator. This is just from my back testing. You can find your own results yourself, but I think that it is one of my most effective and powerful indicators, and it is available for free on TradingView. You can find the link in the description and the pinned comment on this video. So let's get into it. So today I'll go over how to use zone strength. I'll go over how zone strength is calculated, and finally I'll do some back testing, either 100 trades or to the limit of where TradingView lets the 1 minute go into the past. Okay, so let's get into it. So here I am on TradingView. I'm on the Ethereum USD chart, and I have zone strength pulled up. I also have RSI. This is what I use for entrances and exits as confirmation for zone strength. So to find zone strength, just go to indicators, go to community scripts, search zone strength, or you can search just WB Bergen. You will find that zone strength, this is it. I have some digression about how it works here, and I'll explain that in this video. You add it, so I'm going to add zone strength. And what you'll notice is that it already has some default noise. So what I'm going to do in the settings is I'm just going to delete, or I'm going to make the source not show, right? And you can leave these settings for now. This is what I based my back testing on. There are a few settings that you can change. You can change the amplitude, the wavelength, signal length, and you can make it square if you want to look at a shorter time frame and you want some more trades. Of course, with the more that this indicator flashes, the shorter the wavelength, the more false alarms there are going to be. That's with any indicator. The more sensitive it gets, the more noise it creates. But let's look at where to buy and where to sell. So a buy zone, okay, will be when the zone strength is below the negative 0.5. So outside of this area in the center, this purple area, where it's below the negative 0.5 and where the RSI is also in the underbought territory or the oversold territory. So right here would be a buy. Right here would be a buy. And it's the opposite for sell. So when the zone strength is above 0.5, especially when it's above 0.1, that's a point where you would sell. So we want the RSI going back into the center. This would be a sell right here. This would be a sell right here. And this would not be a buy because while the RSI is low, the zone strength is still showing the heightened curve above the 1, and it's also above the 0.5. So now that we have an idea of when to buy and when to sell, let's get into how it actually works. Okay, so the zone strength indicator works based off of a very complex logic diagram. So first, we look at whether the Heikin-Ashi close is greater than the Heikin-Ashi open. If that's true, we see if the high is greater than the Heikin-Ashi close, and if that's true, we determine specific variables based off of that. This statistic is the Stringer statistic. It is used in some of my other indicators, but for this indicator, all you really need to know is that it looks at the resistance of the wick in comparison to the body. So this is an example when the high is greater than the close and it closes positive. We're basically just looking at the difference between the open and the high, and the difference between the high and the close. And this is the opposite when we're dealing with when it closes lower than it opened. So this would look at the difference between the open and the low, and the difference between the low and the close. So this is what it comes out to be when we look at all these different statistics. This is what the stringer is, and then what we're doing from this is we are finding the extrema within this period. So we are setting periods, right? These are what these little rectangles are that you can see, right? we are finding the highest and the lowest value within these periods. This is giving us a range of support, and also it's quite similar to Bollinger Bands, where you have a expected volatility. This is basically just a standard deviation of the expected volatility. Okay, and then the wavelength of this statistic is taken out to smooth the zone strength's final statistic. So this is basically just a SMA of the extrema, right? And then what we are looking at is the difference between the current high and low from the wavelength. So this is the high line, this is the low line, and we're looking at the difference between the current highs and the current lows between these two. And this forms this ratio right here, right? So let's start. So I am not doing any short positions in here, and I can't do the chart replay because I don't have TradingView Premium. But so for each, I'm going to match up a buy with a sell going next, and then a buy, and then a sell for however long it takes. And I'm going to work backwards. So I'm going to quickly pause this for a second and tell y'all what I'm doing because we don't have the chart replay. So for here, I'm looking for the first time where it marks a sell because I don't know what time in the past it will indicate buy, like right here, but I'm judging on first come, first serve. So right here is the first time, even though afterwards there's a peak where it also flags sell. We wouldn't know this at this time, so we would mark sell right here at the earliest possible opportunity where it crosses over like that. So that's just how I'm doing this in lieu of the chart replay. So let's keep on going. Here I am on the backtesting conclusion. We have an average return by trade. We only had 11 trades because that was the maximum that TradingView would limit on the 1 minute time frame for Ethereum USD. But we have an average return by trade of 1.96%, almost 2%. That's amazing. We have a standard deviation of returns of 1.52%. The one lower deviation is still positive, which is a great sign for this indicator. We have a median return of 2.06%, about 82% trades profitable with an average profitable trade return of 2.43% and an average lost trade return of negative 0.17%. Of course, we only had 2 lost trades, and this is a very low sample size, so I encourage you to do your own research. We had a profit ratio, which is the average profitable trade return in relation to the average lost trade return of about a 94%. We have 11 total trades, and the average length of holding between a buy and a sell was about 6 hours. So overall, this is a pretty powerful indicator. I made it so that it's pretty versatile. You can change the settings at will, and the amplitude and with the wavelength, depending on what specific criteria you want to track on the chart. But overall, this is the zone strength indicator. I encourage you to use it. It is for free on TradingView. If you like the content, please like, subscribe, and comment. It helps a lot, and I will provide the link to the indicator in the description and also in the pinned comment below. So thanks for watching. This is Technically Bullish. I'll see y'all next week.